Sponge holding up 3.5%. Let's bring on board Mayuresh Joshi. Mayuresh, that's that Tata Sponge, but we've got Unilever, which is slated to come out with its numbers. What is it that you'd be watching out for? Give us 3 pointers.
Afternoon, Ayesha. Now, clearly, I think volume growth is going to be very, very key for Unilever, specifically on the strong quarter that they've probably posted. Obviously, they benefited because of a low base, but large element in terms of volume growth, which can be anywhere between 8 and 9%. In our estimates, I think that is one aspect to be seen. The other element is within the different business segments, what kind of EBIT margins are posted specifically in the personal care segment, because there have been price hikes which have been taken in the other segments as well. So 3 to 4% is what they've probably taken, and selectively on the personal care segment as well. So what kind of an impact do input cost inflation and what kind of a demand trajectory does the management give going forward? I think that will be key. And the third angle obviously is going to be the naturals portfolio. So the naturals portfolio has been doing pretty well, whether you talk about Indulekha or the other products. But there again, I think what kind of growth dynamics does the management see? So overall, I think the demand outlook in terms of discretionary spending patterns, because rural is still outpacing urban at this point of time, and the mini Indias that they've probably created in terms of enriching and deepening the distribution reach, what kind of impact does that have in terms of the growth-led realization growth? So I think important pointers if the management can allude to in their press con post the results, I think those are the important facets to be watched out.
Okay, that's the expectation then when it comes to Unilever's numbers. But today you're seeing a meaningful move in not just some of the financial names, but OMCs as well, Mayuresh, have seen a rebound. And this rebound has lasted us 2 trading sessions ever since that spiral down happened in crude. There are divergent views coming in. While some say that OMCs are now a good contra bet, but while others seem to believe that it's still at best only a trading call. What is your own sense? Do they make for an investment case, or is it just a trading bounce that you're seeing, so you'd have a rather short-term view and you think that's the best positioning when it comes to OMCs?
So 3-4 broad pointers, Ayesha, on the OMC pack. I think with the fall in crude prices and the retracement of the rupee against the dollar, I think that does alleviate the kind of earnings hit that these companies take. So if it is expected that crude probably stays around these levels and rupee doesn't depreciate further to the dollar, with the assumptions that the external factors do not go wrong from these levels, I think the kind of hit that they've taken in terms of the price knock, I think gestates a lot in terms of the sensitivity to earnings hit that they can take. So that's point one. The other element in terms of what they've probably taken in terms of the government prerogative, both in terms of the excess duty cut and the 1 rupee burden that is going to be shared, I think government officials are making it clear that deregulation is here to stay. So again, I think if crude cools down, I think they will probably try and make up the kind of losses that they are doing. So the kind of hit that one really expects to come on their book value, and if you can draw parallels between FY13 and FY18, I think they were trading substantially below book because of all the concerns which were very, very similar at this point of time. Crude was spiking up. There were fears of deregulation being rolled back. So to that bit, again, I think the kind of valuations that they are currently around one-time book for most OMCs, I think reasonably fair in my opinion. The third element obviously is the kind of capex that these OMC companies are doing, and they have embarked upon a substantial capex program. Now the utilities that they already have at place, I think the GRMs there and the margins are here to sustain. So the Nelson complexities for a few of these refineries should hold up the margins for them. And the fourth element obviously is their overall SOTP earnings. So I think one is the marketing margin part where the concerns obviously lie. The other element probably is the refining business, which probably should hold up, as I said, and improve moving forward as new capacities come up. The third obviously is the pipeline, and the fourth is the petchem business. the realization should be quite reasonable. And the fifth element is their investments. So OMCs make a good bet selectively. IOC, BPCL probably are good bets at lower levels.
Okay. Marish, having said that, in the upcoming earnings, are there any specific companies that you particularly would be watching out for where you think there could be a big turnaround in earnings or their reported financials?
So not sure in terms of big turnarounds, Tanveer, but I think it would be interesting to watch the consumption space. So as I said, I think with a keen eye on HUL's numbers and what the management probably indicates and points out in terms of the economic landscape and the demand patterns, I think consumption, both FMCG and consumer staple stroke durable stocks, would be very, very interesting to see. Again, I think a lot of managements have made it clear that volume should come back to normalized levels. But if they indicate that these volumes are here to sustain at normalized mean levels, and if there is a realization pass-through which we feel because of higher input costs, and if that growth sustains, which is volume-led realization growth, I think the margins should sustain and the valuations as well. So I think these companies should be keenly watched out for. A few of the banks is somewhere where I'll keep a keen eye as well, because the expectations largely are that the retail-oriented banks should have a reasonable set of numbers. Even NBFCs for this quarter should have a reasonable good show. What happens next selectively for a few NBFCs in the aftermath of what we've seen should be keenly observed as well. But even few NBFCs should report reasonable set of numbers. And IT and pharma, in my opinion, should have a reasonable set of earnings as well. So the cross-currency tailwinds will obviously hit IT, though the rupee depreciation would offset a part of that benefit in terms of gains that they'll probably achieve from that one. But utilization level, digital investment should hold them in good stead. And similarly for pharma companies, I think new launches expected to come through, margin accretion expected to happen because of lesser cost and cost optimization. I think those earnings should also be in good stead.
And we've spoken about this, Naresh, earlier as well, but I just want to revisit the theme under the story that's developing. You think this would be the kind of respite that the sector would need and for the country as well from a macro perspective?
So obviously I think measures need to be taken, Tanveer, to probably boost oil production, because the kind of imports that we've got and the hit that it takes in terms of our import bill, I think that's substantial. And the concerns have been starkly laid out with the hike in crude prices that we saw. So any spike in crude prices not only increases our import bill, but also causes the import inflation to probably start moving higher. So yes, I think all these measures are a step in the right direction. They obviously entail huge investments, the kind of investments that are probably needed, both in terms of oil and gas blocks. And these again are long gestation projects. So I think one really needs to understand from that perspective. But yes, I think any developments on that front will be taken very, very positively, though I think the results will be back in.
Okay, that's the word coming in on what to expect from oil and gas as such. Do you now believe, Mayuresh, that there's value in iShares after the recent correction at 24,200 roughly?
So yes, I believe so, Aisha. And again, I think if you look at the dynamics, the kind of demand patterns that probably exists for the bikes, specifically the 350cc and above, I think the demand patterns are still very, very strong. Eicher is expected to come out with two more models, the Interceptor and the Continental GT. And here again, I think the expectations of good demand actually outstripping supply can very well play out. So with the expanded capacity at almost 9.5 lakh units, I think demand can still outstrip supply. Now the ASPs that you've probably seen, I think the ASPs are bound to increase, both in terms of input costs actually moving higher, and the expectations that the company will ideally watch and like to protect its standalone margins at 30-32%. To that bit again, I think the dealer network has improved. It's almost 825 odd dealers, expected to take it to around 1,000 over the next year and a half. The spares and the other accessories business is a high margin business, is almost 9% of the overall top line, expected to improve as well. And the Volvo JV has been working pretty well. So though the discounting has remained pretty high on that front, I think the margins have sustained and the volumes itself are showing an increasing gradual trend. So you have to sum it up. Yes, I think the Kerala floods, what you've probably seen in terms of last 2 months numbers, I think a little bit on the softer side. But again, I think demand should come back very, very strongly for Eicher. Its overseas operations should also aid the overall SOTP valuation. And if you look at the overall earnings profile, I think with the correction, I think it is attractively priced. So there might be short-term bumps and hiccups, but the medium and long-term story, in my opinion, still remains intact. So remain positive on the stock, and clear disclaimer, I hold this stock in my funds.
But Mayuresh, what's your opinion on power space, especially Tata Power and Reliance Infra, top gainers in today's trading session? This sector has been getting a raw deal. Do you think it builds a case looking at the way prices are moving? What is your fundamental opinion on this space?
Afternoon, Siddharth. I think one really needs to keep a watch, as you rightly said, in terms of how the pricing is going to happen, whether it's for thermal or the renewable energy space in general. Now again, I think within the space itself, there are news in terms of resolutions probably happening for the Gujarat affected power plants. And Tata Power in particular, I think the kind of under-recoveries that we've probably seen in all its units, including the fixed costs at Mundra, the capex not allowed at its Maithon plant, I think that has played out in terms of very, very soft numbers. Now that has probably got offsetted in terms of Mundra and the coal JVs, because I think the coal JVs in the past quarter reported an EBITDA of ton of $21 odd, which is quite reasonable in my opinion. The other element obviously remains the high debt component. So with the acquisitions that they've done specifically in the renewable energy space, the debt levels have ballooned northwards for Tata Power. And any deleveraging aspect, I think, is going to be keenly watched out for. The management has alluded they probably are doing that over a period of time, and that will alleviate a lot of the leverage concerns on their balance sheet. Now, any relief that probably comes through in terms of pricing, that does take the under-recoveries portion off their balance sheet and a substantial headwind of the P&L as well. Because the working capital apparently has come down, both in terms of receivable days as well as the recovery in the regulated assets, both for the Mumbai and Delhi region. So is there value in the stock? There is value in the stock, but all these factors will be watched out for Tata Power in particular. Within this space, again, I think we'll go in for the biggies, Siddharth. So I think Power Grid, NTPC, where our own belief is that the capitalization should exceed the capex that the companies have laid out, and the regulated ROEs should probably improve going forward. So again, I think Power Grid, NTPC, Tata Power, there is substantial value, but look out for the factors as I mentioned.
Mayuresh, what's happening, at the retail end? You are part of one of the largest retail broking firm. What's the mood? Are people scared about the way fall has happened? Are people buying, or are they waiting to buy at lower levels, or they are waiting for their prices to come and then move out of market?
I think the apprehensions are very widely spread out in the retail arena. Obviously, I think with the market fall that you've probably seen, there is apparent fear in the minds of retail investors because their portfolios have taken a substantial hit. But again, I think our premise and our conviction probably stays with the market. And our belief is that another 5%, I think, is where the earnings yield will start looking attractive. So around 9,900, 10,000 odd levels, the earnings yield for the market as a whole seem to be very, very attractive. Yes, I think the fall has been brutal, but again, I think good quality stocks are now available at very, very reasonable valuations. So again, I think we are trying to suggest getting into good quality names, get in a very staggered manner so that it reduces their impact cost, and you also take care of the volatility that the markets might witness over the next few weeks as well.
Thank you, gentlemen, for joining us and sharing your market view as well as stock and index and sectoral ideas with our viewers. I'm sure our viewers are benefiting out of it. Let's take a quick commercial break. On the other side of the break, my colleague Awan would take forward and discuss what's happening in this market.